today's video, we have a few charts to look at from the overnight session, and I'm also going to be talking about central bank action expected later today and US GDP figures. Hello and welcome to another acysecurities Hot Topics video. My name is Alistair Schultz and I'm going to be your host for today's trading journey. The first thing I'm going to look at today is coronavirus and the number of cases around the globe. I have done an update this week already, but it is becoming more relevant again, as you would see in most media sources at the moment. We have more than 44 million cases around the globe. We've had more than 1.1 million deaths and more than 29.7 million people have recovered. However, we are seeing renewed lockdowns across Europe, with France and Germany invoking national lockdowns. We're also beginning to see curfews in other countries across Europe, such as Spain, Italy, and of course Greece. But there is likely to be more lockdowns and more infections to come, particularly as it is starting to spread a little bit uncontrollably. Now in the US, we have a similar problem with coronavirus where it is starting to spread. Both of these continents are making new record numbers every day, which is a little bit concerning, and that is why we've seen some interesting market action overnight. But it's not the only reason we've seen some interesting market action. We have seen some stuff occur based on coronavirus, but really it's a combination of effects from a number of different events. Now, looking at the S&P 500, we did see it come down last night. Now, a couple of days ago, I pointed out what looked to be the start of a double top pattern forming on the daily S&P 500 chart. That has now raised my suspicions of it being an actual pattern, and that we might actually see a good opportunity for a trade going south on this one here. Now, what I'm planning to do is I'm looking to see if I can get a neckline break here, and I'm going to wait until that actually occurs and then look for a target of profit a little bit further down near one of the resistance points from on the way up. Now, moving forward from the S&P 500, which has obviously had a pretty bad night, 3% down, we've also seen the ASX or the AUS200 come down this morning and a little bit in this earlier session from futures. But of course, this is all related to what we've seen in the US equities market. Now, we are expecting today to see stocks in Asia, across Asia, and obviously Australasia starting to travel down south, following suit from what we see in the US. Looking at the Aussie dollar, you can see here how much the US dollar has actually increased in value recently overnight. Now, the dollar index has risen roughly about 0.6%, and the reason for it rising is because of all the coronavirus stuff. We've also got a backdrop of a US election, and now we're so close to a US election without any stimulus, it is raising some concerns. Not only that, but the election itself brings a new host of problems. So we really have to wait and see who comes out on top to really make our next moves on thoughts about when we're going to get stimulus and whether it's going to be before the end of this year or if it's going to be in 2021 at some stage. It also raises the question as to where the money's going to go. It raises the question of how much money it's going to be. So there are a lot of unanswered questions here that we need to really unpack before we can actually make some moves on them and look for those opportunities. But unfortunately, we are going to have to wait until we do get a president, depending on whether it's the current one who's sitting a new term or a new one. It will change how we look at that situation. Now, moving on, I'm also going to give you a bit of a heads up on the Bank of Japan monetary policy statement today. We are expecting to hear some news from them. The main focus is likely going to be on the bank's risk assessment. I believe they're going to be looking at what some of the factors are that are going to be really damaging to the recovery efforts of the bank so far, and whether it is appropriate for them to adjust perhaps next time round. I think it's unlikely for us to see too much change to policy this time. They'll be setting the stage for perhaps next time round instead. I do expect there to be a lot of jawboning, particularly from the governor, who is often found famous for being a jawboner. So let's keep an eye on what happens there. And we will likely see some trimming on forecasts as well, particularly on inflation. Obviously, with tourism being down, some of the consumer spending numbers being down, there is likely going to be some interest in how that's going to look over the next couple of months, and perhaps they might be a little bit ahead of themselves at the moment. Of course, there's also potential for extensions on existing programs, particularly with their asset purchase programs, and I'm really going to be focusing on what Kuroda says, the governor says, and how his tone is really going to be reflected. Is he going to be hawkish? Is he going to be bullish? Is he going to be bearish? Those sort of tones. I really want to see how he comes across on the day and how the grammar that he uses as well. Obviously, it'll be conducted in Japanese, but it will be important to see if there are any major changes or shifts in how he's thinking about monetary policy. Now, moving on, keeping that central bank theme, we're also looking at the European Central Bank because they have a monetary policy report coming out tonight as well, and potentially a rate change. I don't think we're likely to see a rate change this time around. The recovery fund is likely to be a hotly discussed topic. We've been hearing about it at almost every ECB meeting for a couple of weeks, and what the numbers are and the talk of the town really there. I think there's going to be more focus on that now, particularly now that they've got such a wide, rapid spread of coronavirus happening. Of course, the new cases and the new lockdowns are also going to be commented on, likely from a risk factor. And it might even mean that because we're looking at this subject as an idea of perhaps being a second bottom occurring, or that sort of W shape in the charts, that might indicate that they are looking at a second bottom and perhaps needing to put in another massive amount of stimulus to sort of push it back up again. But whilst there is potential for stimulus, I don't expect it. I'm not expecting it this time around. I'm expecting them to really set the stage for December. I think they're going to be likely looking to sit real still, keep an eye on how it travels with the coronavirus situation there, and then look at setting that stage for putting more easing, more measures, more policy controls, and of course, more stimulus for that December meeting. So plan to see more PPP and more APP for in December, not right now though. Now, looking forward as well, again tonight we have our third quarter US GDP report, which at this stage is slated to be potentially a record-breaking GDP report. Now, at this stage, it's going to be covering July and September. That's our third quarter. And consumer demand has really been fueling a lot of our growth that we've seen across the US for a number of months now, particularly with recovery in consumer spending on the outdoors. Obviously, stimulus checks have helped with a little bit of that on the retail front, but also in automotive. We've seen a lot of cars going out of shop windows and such. Now, of course, at this stage, it's looking like it's going to be an annualized growth of more than 30%. I think some of the forecasts are sitting closer to 32%. I've seen some banking entities forecasting somewhere in the 34 to 35% range as well. Now, whilst that might be the case, if it does even go up that high, regardless, the output of this third quarter is going to be below what we saw in 2019. So that's important to note. Whilst we're seeing this big percentage increase, we have to remember what our second quarter looks like and what our first quarter looked like. So those numbers are going to be a little bit skewed. Whilst, yes, the numbers are still accurate, we have to bear in mind what's happened just before that and what happened the year before. Now, I'm also expecting that the fourth quarter is not going to be all that good, particularly now that we've got coronavirus sort of running rampant, we've got the election, we've got everything else sort of going on at this time of year that is going to impact how this quarter looks, particularly leading up to Christmas. If we don't see that stimulus package, then you could probably account for a lot of retail services to be in a little bit of trouble at that point in time, which will, obviously, being a consumer demand-driven environment, is going to make that fueling of growth a little bit more difficult. Now, moving on to the news ahead of today. There is a fair bit out tonight in terms of the high impact stuff. I've already covered it. There's not a great deal in low impact. These guys are really going to be taking the stage for tonight. So we've got the the Japanese Bank of Japan monetary policy statement. We've also got our US third quarter GDP reports, and we have the ECB also delivering some monetary policy announcements. So bear in mind, these are going to be your big three contenders for tonight. They're all going to be high impact. We're all watching them very, very, very closely. So I will be maintaining my view on those as like a hawk. Now, if there is anything from today's video you'd like to get in contact with me about, please feel free to shoot me an email at talk2al@acy.com. And don't forget to like and subscribe to this video so you can get more great content from me and ACY Securities in the future. Have a great trading day ahead.